Right, welcome back, and joining me with his analysis of what's played itself out on the market scene today is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. I was actually just looking at the rand against the US dollar, now it's standing just below 17 rand 70. At some point during the minister's speech, I think it went to 17 rand 73, 76, somewhere there. And I'm wondering if this is maybe a sign that there was certain nervousness that the market has taken from the speech.
All the comments I saw over the last 3 days was, the market is turning positive on South Africa and bullish on this medium-term budget speech. And I suppose it was a little bit of a letdown, but I think we need to see this against the broader background. This was a day where globally yields increased, the dollar strengthened. And even though we saw a little bit of a give up relative to the open, and certainly a give up relative to the bullishness we were seeing earlier this morning, overall, both the rand and South African bonds have performed pretty well over the last 3 days. But yes, I think the downgrade in growth expectation, no real solid, trajectory for fiscal consolidation, other than quite a conservative concept in that cap, which Treasury is still pushing for, despite resistance from the ANC. But I think ultimately the picture remains relatively rosy in the medium term, but in the short term, we're not there yet. Fiscal consolidation is not going to happen overnight. And this is just one of those things, government turns slower than the market expects it to.
Well, Cobus, let's actually go into some of the JSE counters that came out with numbers today. We did have Implats there coming out with a quarterly trading update, production update, saying that the production volumes were lower, but full-year guidance has been maintained. I did see that share price dropping almost 5%, and I'm wondering if that drop was actually due to that update or just due to the general PGM sourness that we saw on the JSE today.
So one of those interesting dynamics we have in the world of PGM at the moment is a drop in supply output, and this has been guided well by Implats. There's nothing unexpected from this update, other than I think one fatality which caused an interruption. Most of the decline is actually scheduled maintenance, which is why the full year guidance has not been adjusted at all. So from that perspective, no, it's not the update that caused this overhang. The sell-off was industry-wide. What I will point out from this update is, given that the outlook for PGMs has soured a lot over the last few years, we're talking about electrification, which is, of course, relatively negative for the PGMs. It is clear that they are not investing as heavily in output as before, and this is a general trend really globally, where production output is on the decline, and capex isn't flowing into that market, which ultimately, in terms of the commodity super cycle, ends up being positive for platinum. Because as investment tapers off, you can't just ramp it up once there is demand again. And as that demand tapers off and fails to, that supply tapers off and fails to meet demand, that actually leads to higher prices. And that's typically when we see an upswing in the high margin producers. So that's just in terms of general trend.
Yes.
Ultimately, we saw a sell-off across the sector today, but that's off the back of being the best performing sector in the world this month. So some consolidation from pretty lofty levels there. I believe this morning that sector was up in excess of 20%, whereas the JSE more broadly was still down.
Wow. All right, well, let's go into food production. Tiger Brands came out with a voluntary trading update for 2 months. They talk about an improvement in performance in the second half of the year, but not in all divisions. Also, some numbers there still reflecting a tough economic environment. What did you take out of this update?
It's an interesting turnaround play, and the market is giving them the benefit of the doubt at this stage. obviously a highly rated CEO that they've gotten in, and we're slowly seeing those changes coming through. There are some, tailwinds in the form of load shedding alleviating, which was a severe headwind from Tiger Brand's perspective. Ultimately, we remain quite constructive on the stock, and I
Okay.
think it's still it's still a long way to go there, but not a lot of color in terms of this update. We'll have to really wait for results to get a better picture. But it looks sort of in line, from a market reaction perspective.
Yeah, I even saw because there wasn't really any disappointment or any kind of cheer. The markets were relatively, I guess, satisfied with the update. Well, talking about satisfaction, let's get to your stock pick for today, Cobus. What are you choosing?
So I tried to remain topical. We haven't discussed the topic I was hoping for. The other budget speech, high-profile budget speech that came out today was the UK, which is, of course, the first budget tabled by the new Labour government. And the market was looking for essentially additional investment being driven by the state. Of course, under the Tory government, there was a lot of austerity. In the first place, they tended to cut budgets. Was actually an infrastructure investment. So the new government coming in, hiking tax quite significantly. I believe it was sort of market consensus that there was too much revenue pressure from a fiscal perspective, way too much accommodation without the necessary underlying investment, and to the point where a lack of public investment was leading to a lack of private investment. So the market seems to be very happy with the UK budget, and in a stock where we can get pretty decent exposure to both the UK in general and of course UK gilts in particular is Reynard. Their largest holding is Pence Corp, which is a very well-run asset management and pension services business, listed, not unlisted, but operational in the UK. And I believe the last NAV update we got last week indicated substantial expansion in NAV, but that is not a set of results. We are still waiting on those quarterly results. So the discount is pretty deep, around the 26% level. And we still like Reynard a lot. And now, if the UK is on a more robust path fiscally, that also bodes well for the pension businesses. Of course, doing asset and liability matching in that environment is a lot easier, and it's supportive of their bond holdings. So from that perspective, it's a little bit of an additional upside for Reynard in that market.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today. Cobus, that was Cobus Potgieter from Southern Cross Capital.